I'm Michael Fox, and this is the Prospector Podcast. And I have joining me returning guest, Chris Temple of the National Investor. Welcome back, Chris.
Hey, Mike, how are you?
I'm doing good. So
Good.
you're now traveled your way back to Wisconsin. You were in Wyoming. Did the feds invite you for s'mores? That's all I wanted to know. Did the feds invite you for s'mores?
No, I kept my eye on my phone while I was out in Casper and wondered if I was going to make a trek over to Jackson. But Jerome Powell never got a hold of me, regrettably, so I missed that.
Well, that's a shame because I understand there's no s'mores like a Fed s'more. So,
Yeah.
but you were in Wyoming actually for a specific reason. You were speaking at a uranium conference, if I remember correctly.
Yeah, it was the U 2025 Global Uranium Symposium. It was put on by the Wyoming chapter, Wyoming division of SME, which you and I are both very familiar with. So that was actually the second time this year, the other one being back in the spring when we were in New York and did a uranium panel then. So it was great. It was a great meeting. They are a much larger gathering than what they had 2 years ago. This is biannual uranium symposium. The next one will be in 2027 down in Corpus Christi, Texas. But yeah, Casper is the epitome of what a city that is built around extractive industries looks like. Good, hard work, and simple, salt of the earth people and businesses, and a lot of really, really exciting stuff. And one of the comments I made afterward, and I'll be following up on this in a national investor in the coming days, Mike, is that for someone not trained as a geologist, I've been around all of this stuff for decades, and I've got a pretty good understanding of terminology and processes, et cetera, when it comes to energy, oil and gas, gold, copper, lithium, all these different kind of things. But even though uranium, as you well know, has been one of my top stories for quite a while now, that's kind of down on the other end of the totem pole for me as far as my own knowledge of the industry and its intricacies is concerned. And so I kind of went to school there. And besides my lunch keynote talk that I gave the first day, after they had everybody from the mayor to the governor. They had John Barrasso, the senator, was there. The other senator, Ms. Loomis, she couldn't make it, but she just visited remotely. Representative Hagerman was there. So they had all kinds of people. I followed all of them, and that was all good stuff. But after that, I really rolled up my sleeves. I sat in on a lot of the workshops, and my learning curve accelerated dramatically as far as the nuts and bolts of the uranium industry, what to look for, what not to look for in projects, and overall very insightful and exciting stuff, which I'm still digesting.
Well, that's a good thing. It's one of the things that I personally enjoy about when I participated in an SME event is, yeah, I'm expending some of my knowledge on the people that are there, but I gain tenfold back in the knowledge that I can get from those that are there that can teach me stuff that I'm still learning or I haven't even got a clue about. And that's the brilliance of an SME event.
For sure. Yeah, very much so. And that's especially when you have an event like that that's not fluff and a typical investor conference, but this is a roll up your sleeves home show that it's like it's all, get to work.
Yeah, no, I like to refer to those events as inside baseball. That's when,
Yep.
everybody in the industry gets together and puts their heads together to take a look at things and get a state of where we are and where we should be going. So yeah, fantastic. But the big news that came out of Wyoming probably wasn't that. It was probably back to the picnic and the s'mores with the feds. What do you take of that? Looks like they're capitulating, and we're going to see a rate cut in September.
Well, maybe. I mean, the Fed still left itself an out, and I think that on the surface, the markets where the Dow is up nearly 1,000 points. The one day there that Powell gave his speech, is measured by the Dow. I think they read more into his speech than he actually said, because you had all the usual whats and ifs and maybes and sort ofs, and in this instance or in that instance, and all that kind of stuff. But the sense of the market certainly is that it almost doesn't matter unless there's something really glaring, what the statistics are, the data is between now and a month from now, or less than a month from now at this point, that the Fed is going to give us at least 125 basis rate cut on the federal funds rate in this next meeting coming up. It's not a sure thing. The markets still give it, however, a 4 and 5 chance of happening. And it's interesting and noteworthy for a lot of reasons. Now, notwithstanding, Mike, the fact that Jerome Powell is held to his guns and his, story of saying that, the labor market is healthy enough, the economy is healthy enough, inflation has bubbled back up again a little bit. We don't want to be premature in cutting rates and end up with a bigger problem. And in fact, yesterday, as we're recording this, John Williams, the New York Fed president, who, unlike some of these others, has a permanent seat on the board of governors and in the rate setting policy meetings, he was still very equivocal as far as whether there is going to be a rate cut in September or not. He sure as hell didn't guarantee it. He suggested that they're getting there, but we'll see what happens. But this whole story and the whole attempt by President Trump to get the Fed basically by the throat and turn it into a tool of the Oval Office rather than the quasi-independent entity, quasi-private entity, as even the U.S. Supreme Court called it earlier this year. That belies something more fundamental, which is why, one of my working titles for some work I wanted to put out at the end of the summer, of which this is a part, is this a new golden age that we're going into? Is Trump really correct, or is he setting us up for really an epic bust that would be magnitudes worse potentially than what we saw in 2000 and 2008? That remains to be seen. But, the president wants the Fed to embark on an inflationary policy. He says there's no inflation. Of course, that's not true. But he wants the Fed to embark on inflationary policy. And at least in this regard, I'll compliment him and stand up for him in this respect, Mike. He has made no secret of the fact that in order for us to service the debt and in order for the economy to do well and for him to achieve a lot of his economic policies, we've got to have the Fed aggressively printing more money. And we've got to have all of these regulatory and policy things coalesce with that so that it broadens the base of the economy, it broadens the tax base, it increases good paying jobs, it gooses the financial markets, et cetera. That's his game plan. And he's not made any secrets of it. And I said, if you remember, before he even got back into office in January, that my base case for the Trump presidency would be that, yes, we probably will have better economic growth in the end than we would have had under President Kamala Harris, but it will be at the expense of still sticky and arguably even higher inflation and interest rates. And that's still, I think, where we're going, notwithstanding the risks that all of this gets out of the market's control and the Fed's control and the president's control and implodes on them.
Yeah, as I looked at the statements and that, I likened it back to what I've been talking about as well, in that the Fed was rapidly approaching a Sophie's choice. Is it going to fight unemployment or is it going to fight inflation? And it couldn't do both. And it would seem that some of the luster coming off the jobs markets with the re-ratings of the jobs numbers that came out, it seemed to put the focus on the unemployment rate as the key driver and not inflation, because at the same time that happened, the PPI indicated up. The core inflation on food and shelter and that it's up. And a lot of the things that the Fed up until this point that's been fighting are starting to track in the wrong direction. Yet here we are with them signaling, a quarter point cut because the jobs numbers are off.
Well, this morning, as we're recording this on Thursday, the weekly jobless claims was not a bad number. There's still more health than not, at least in the statistics. I believe, as you do, and we've talked about this many a time, that the Main Street economy under the surface is not as robust as has been believed because of people focusing on financial market activity instead of other things. But look, Powell said a couple of meetings ago, and you and I talked about this at the time, that when he was put on the spot of when you get to that choice, when you get to that Sophie's choice, which is it going to be? And he didn't make any mistake about the fact that no matter what the inflation readings are, if all of a sudden there was a notable drop in economic activity and a notable drop in employment, that started getting a lot of people talking, that's the one they'll respond to. So I don't think there's any question about that. The question between now and their meeting in a few weeks is going to be, for example, the August payrolls number, which we'll get a week from tomorrow, next Friday after Labor Day, does that give them the final arrow in their quiver, so to speak, to be able to at least cut 25 basis points in September as an initial matter to shut up the president and the markets? Or do we have a strong jobs number and it gives them pause again? Because it's still a very close call on the Fed board. And when several days ago the minutes came out from the last Fed meeting, that certainly would not lend anybody to believe that a rate cut is automatic next month. So this is still, I mean, the odds are tilted that way. The politics is tilted that way. And whether the Fed wants to admit it or not, they're leaning that way right now. Again, just to do it, just to shut the president up. And they figure, well, what harm can we do by cutting interest rates now and then sit back again and wait and see?
Okay, let's flip the coin. That was heads. Let's say it lands on tails, and they say, yeah, the data says that we should probably not do anything. How big is the fit going to be? And I mean both the markets and the president.
Well, there would be fits from both. Now, the market has clearly already priced in a couple of rate cuts in the coming months. In fact, this week, if you look at, a lot of people like to look at the 2-year Treasury note versus either the 10-year note or the 30-year bond. By both of those measures, the yield curve is steeper now than it was at any time since Powell first unleashed all this inflation a few years ago. And this is still, Mike, going to be the Achilles heel of, President Trump. Maybe somebody is behind the scenes going to tell him, be careful what you wish for, because it's universally understood by people who understand bond markets and aren't just following blindly the president's political rantings or anything else, that if the Fed, especially with inflation percolating up again, does knuckle under to Trump and start cutting interest rates, the yield curve will widen further because the bond market vigilantes will say, okay, well, the last player currently that really gives a rat's ass about inflation now is going to surrender to the president and cut rates with inflation having bottomed 4 or 5 months ago and now on the increase again. And you'll see the long end of the bond market go up. So as far as the yields are concerned, I mean, the bond valuations would come down. And this is all a reason, Mike, why long-term yields still have not moved a whole heck of a lot. They're certainly not at the highest they've been. I mean, we were at the peak for this cycle, we were almost dead on 5% for the 10-year Treasury. Lately, we've been around 4.25, give or take a little bit. But there's not a whole lot of reason for it to go much below that. And what people need to remember, and again, the political posturing and whatnot notwithstanding, is that what the Fed does to the federal funds rate is not what drives mortgage rates, unless you have an adjustable rate mortgage, then maybe it does a little. But it's the 10-year Treasury chiefly that's the benchmark for those kinds of borrowing costs. And if by the Fed surrendering somewhat on inflation and cutting short-term rates, if that drives long-term rates up, now you've made the problem of mortgage affordability worse, not better. But here again, the president sometimes has been brutally honest about this. I mean, people need to take this for what it's worth. That now the Treasury, is pretty much doing the equivalent of payday loans, and now everything that they're doing 30-day, 60-day Treasuries, and this is going to go on indefinitely with the level of debt. So, this is a no-win situation, and it's why I said a long time ago that the president is making a huge mistake, and I say it again, to get in this public pissing contest with the Federal Reserve. He does not have the legal authority to try and do what he's doing. The math is decidedly against him. And why doesn't he shut up about Powell and show how much he can really think outside the box by setting up or getting behind this National Infrastructure Bank initiative, which can add trillions and trillions of economic growth without increasing the federal debt? Why doesn't he float the idea of completely abolishing the Federal Reserve and having a government-run currency? Maybe the cure would be worse than disease, I don't know. And then you have a currency board. You get people that the markets trust who aren't just going to be serial inflators like the Fed has been. You get rid of one bad actor and substitute a worse one. But do something like that where, at least for certain public purposes, we're not borrowing the money from a quasi-private entity, as the Fed is. Those are two things he could be doing, certainly the first of them, without ruffling too many feathers and by taking some of the initiative and control of economic growth away from the Fed. But if this is all he's going to do, he's making a huge mistake, and it's not going to end well for him.
No, and he's escalating that pissing war with the Fed. It's no longer just about Powell. He's set his sights on another Fed Fed head and wants to fire her over, you know, yeah, she may have donated. Yeah, technically it's illegal, but it's a pretty mild reason for firing somebody off the
Well, she
Fed.
hasn't even been she hasn't even been charged yet, Mike.
No. Well, that's true, but the accusation is out there, and it's a pretty flimsy charge to be fired over. They had another Fed person resign, so is he just going to try and, like he became the Republican candidate the first time, just kind of target and pick them off one by one, and till he actually does have control of the Fed?
Well, what he's trying to do, and again, he's very transparent about it. He's not leaving any secrets of this. He is trying to do the Federal Reserve what the Democrats from time to time have suggested what they want to do with a Supreme Court, in which Franklin Roosevelt once upon a time tried to do with the Supreme Court unsuccessfully. And that is when the Supreme Court is too conservative, doesn't do what you want to do to be a more activist government, you stack the court. So there's been numerous times over the years that the Democrats have said we've got to go from 9 members to 13. We've got to term limit them. We've got to make them at least somewhat indirectly susceptible to the popular vote and stuff like that. Those things have never flown because institutionally we're not that far gone as a republic, or what's left of our Republican form of government. Trump is trying to do exactly the same thing with the Federal Reserve. Now, I used this phrase a couple times already, Mike, in our discussion, but back in the spring, if you remember, Trump was called on the carpet for unilaterally firing some people in the administrative state. And he was said, well, you don't have that authority. And he sought to get a blanket ruling from the Supreme Court as to where his power as the executive ends when it comes to just up and firing somebody that he doesn't like or isn't doing what they're told or whatever. And the Supreme Court back in the spring did weigh in on this, and essentially by the usual, these days, 6-3 conservative majority, did say that he has a fair bit of latitude in firing department heads and administrative heads and things like that. But they went out of their way to exempt the Federal Reserve from that ruling. And again, they said that, and the Supreme Court's phraseology here is that the Federal Reserve is, quote, uniquely structured. It's a quasi-private entity, end quote, like the first and second banks of the United States. Now, I heard a commentator yesterday while I was in the car going from one family function to another here in the Wisconsin Northwoods that Trump, wants to fancy himself an Andrew Jackson and take control of this. Well, I got to remind the president of a few things. First of all, the term, the charter for the second bank of the United States was expiring, and it was not perpetually a U.S. institution. He did not assent to renewing the bank's charter. Trump does not have that card to play. The Federal Reserve does not have an expiration date, unfortunately, for all of us. So he has no legal authority to do this. He would have to get an act of Congress to modify or better still abolish the Federal Reserve Act of 1913 and abolish the bank with it. That's not likely to happen, unfortunately. So, what he's trying to do right now, again, is stack the Fed, since he can't get rid of it, and he knows he can't get rid of it, I think deep down, and doesn't have, unfortunately, the desire to, he wants to take it over, and he wants it to do what he wants it to do. He wants to be like Xi Jinping in China, who when China has a crisis and needs more monetary stimulus or intervention or whatever, Xi Jinping tells the People's Bank of China what it's going to do, and they do it. That's what Trump wants. So he's not there yet. He may not ever get quite there, but he is looking to by this time, well, actually sooner than this, by next spring, he could theoretically have 5 Trump appointees on the board, and the first 2, Chris Waller and Michelle Bowman, don't forget, were the 2 dissenters in the most recent Fed meeting when they wanted a quarter-point rate cut. Now, they didn't want to wait. So we'll see how fast he fills these seats. Adriana Kruger resigned at the beginning of this month, and she wanted to go. Her term was up next January anyway. And she wanted to go back now rather than wait until then in the middle of a school year back to Georgetown as a professor. And so that's another one that he's already got a nominee for. And then Lisa Cook, the Biden appointee to the Board of Governors, who is accused of having falsified mortgage documents or something like that. He wants to fire her. And so I think that the president had better hope that there's a political or some other solution to this, because if the Supreme Court sticks to its story from earlier this year and the case gets there, they will not support his unilateral firing of Lisa Cook.
Yeah, is it just me, or am I the only one that sees the irony in that, considering he was convicted of fraud in New York State for doing exactly what she did?
What do they say about people who live in glass houses? So look, it was a stupid thing for him to do politically, and I've said many a time, including when I got on this subject out at the Uranium conference, that Trump has got so many things going for him that he turns around and bogs himself down in this kind of thing that's a fight that he's very unlikely to win, and one that eventually is going to, take some of the sheen off of these ebullient markets we've had in the recent past that just let everything go off their back like off water off a duck's back. Don't forget that the first time a few months back that he suggested he was going to fire Powell, the markets didn't like it very well. Back in April, his Liberation Day, markets didn't like that very well. We're getting a lot of what those 2 early things promised, certainly on the tariffs front, as some of them are starting to become more and more in effect, but the markets are still up around all-time highs despite that. So, he's got a lot of goodwill in the markets, maybe some, people would say hopium in the markets. And it's really silly for him to risk it with stuff like this, which he's unlikely to win. And when he's got other tools at his disposal.
Well, and let me rain on the president's parade a little bit more. I've been doing some reading, knowledge is a powerful thing, and in the wrong hands like mine, it could be a dangerous thing. But everyone has assumed that Jerome Powell's term is up at the end of May. He could actually stay on for another 4 years. And if the rest of the Fed heads like him as the chairman, they could re-elect him as the chairman of the Fed. So, in spite of Trump's Powell bashing and everything, that could backfire and Powell stick around for the entire Trump term and not be gone until after Trump is out of office. That is a legal possibility. Now, do I think it'll happen? No. Powell's kind of insinuated he'd like to be done in May, but it is a possibility.
It's the slimmest of possibilities, if it is at all, Mike. But no, I think that everybody recognizes and expects that Powell's term as chairman ends next spring. He's on his current term as a member of the board of governors for another year and a half after that. But it's common practice for a chairman, once he or she is replaced, to just leave entirely. So I don't see him sticking around as taking essentially a demotion to stay on the board just to do it.
Yeah, well, as I said, I was reading, and that's what I kind of came up with. And though I, like you, I considered it pretty highly unlikely, it is possible. So who knows, right? So, but the other challenge that Trump has to have is he has to have the majority of that Fed under his control in order to be able to do that. In spite of Powell being the spokesperson, he's the same as all the other, you know, people on that board. He has one vote. So it's possible that, they replace Powell and the rest of the board continues down the same policies that they've had in the Fed going forward without any structural change.
Well, it's very possible. I mean, the Fed itself as an institution relies to a very great extent on the whole emperor has no clothes dynamic. And so, what I mean by that is that the markets, unlike you and I, and maybe some of those listening to us who dive down underneath these things and realize how fragile this whole house of cards and fractional reserve system is at its core, they think everything is fine and dandy as long as we've got sound leadership at the Fed. And don't forget that this last meeting, where you had Waller and Bowman both dissent, that was the first time in over 30 years that there had been two dissenters. The markets will not respond well at all if we have, I don't know what the number is going to be right now, but say a 6-5 vote, of the voting members of the FOMC who are currently seated or something like that, either direction. Because that's a signal to the markets that the Fed has no idea what it's doing, which look, it's still is overrated, okay? But nobody wants to see that. So, I look, my bottom line still is that we have all of the math against us, and so does the president, so does the economy, so do the markets. Because of the obscene levels of debt, it's becoming harder and harder to keep all of these balls in the air as far as new debt, rolling over the existing debt. I think one of the reasons the markets have been forgiving, Mike, is that the tariff revenue is going to put a bigger dent in a deficit than what had previously been thought, but it's still going to be relatively small potatoes when you look at the fact that spending has still not been brought under any meaningful control. So we'll see what happens. I mean, that's something I'm kind of looking at when we get to the end of September, early October. I'm going to be curious to see what did the deficit end up being for fiscal year 2025. And if it's meaningfully below what had been projected at the beginning of the year, which was another 2+ trillion. If we're meaningfully below that, the economy is still doing halfway decent, then I think there's going to be a little bit more justification for the level of optimism in the markets than what I think there is right now. So that's going to be a big deal. And I think that's also going to inform what the Fed does or doesn't do. Because again, the big reason why Trump wants the Fed to lower rates is so the financing costs are less for the national debt. So we'll see.
Yeah, this would be a good time for us to transition to the next level of this discussion. A golden era or an epic bust?
Well, here again, the president keeps saying that, the U.S. is the biggest story. We're the hottest story in the world. He's the best deal maker in the history of the solar system and all these other kind of things. And look, I've made a comparison many times, and I'm going to do it again for these purposes, between the current administration and when Ronald Reagan was first elected in 1980. President Reagan said that if we can simply unleash the U.S. economy and growth, that will cure a lot of ills. And to some extent, it did. There was a deregulation push in the 80s. Interest rates came down, inflation came down. There's a whole lot of stuff we aren't going to go into in great detail right now for time's sake. But the main point is this. Even though he presided over a substantial lowering of marginal tax rates, during Reagan's two terms, the revenues coming into the federal government, if you round it off, doubled over his two terms. So a substantial, huge move, even with a good economy, as everything appeared, and the rest of it. The problem for him was that and the deregulation push was nowhere near enough to compensate for this continuing runaway growth in the size of the government and in federal spending. The annual budget expenditures went up at a faster rate. So whereas Reagan came into office with a $40 billion annual deficit, which was a scandal that Jimmy Carter supposedly gave us, it was several times that by the time Reagan left, and it just kept going up for the most part ever since. President Trump is following the same playbook, but he's added a lot more elements to it that Reagan didn't for a variety of different reasons. Not this wasn't as necessary, didn't think about it, whatever. And as I alluded to a little while ago, President Trump very much understands and is pushing for all manner of ideas, some good and some cockamamie, to try and goose financial market activity and valuations and goose the underlying economy. Look, a lot of what he's done to try and reshore U.S. to get different corporations and foreign entities to invest in the U.S., this is all good stuff. And I wouldn't besmirch any of it. But here again, the question is, when he has been so far unwilling, and the Republican leadership in Congress sure as hell isn't willing, to meaningfully reduce the size of government, is this game plan, which actually his Treasury Secretary has articulated and fairly bluntly many times, and again, they're very transparent about this. Can we continue to have $2 trillion, give or take, annual deficits for the next however many years, but they're less bad as time goes on because in comparison to a much larger tax base, much larger economy, larger tax receipts, the 2 trillion, doesn't really mean as much as maybe it does today. That's their game plan. And there's a lot of risk in that. Again, I think that the risk that the president takes in not doing an end run around the Federal Reserve, but staying dependent on the same system that got us into this terrible debt mess and everything else, that's a huge negative factor that suggests to me that Trump is more likely, all else being equal, to fail rather than succeed. And the more he pushes against that inevitability, the bigger this epic bust could be. Some people think it might happen during his term. Some people think that all of this activity and investment and everything will postpone it until he's gone in 2028. I don't know. I don't have I'm always pining to find, that tricked out DeLorean that Doc Brown has and see if I can go into the future and find out exactly when this all culminates. Without it, I don't know. So there is still this chance. And if you look at long-term charts of the stock market especially, we've gotten this widening gap where every time you have a bigger bubble, you get a bigger bust that follows it. And then they blow it air back in and you get a bigger bubble and then a bigger bust after that. So, is Trump doing enough when you add it all together to change that mathematical equation? No, he's not. Unless he does one of these one-off things, like a national infrastructure bank, like bottling up the Fed in a good way by having the government deal with currency. And look, there are ideas floating around. I'm not smart enough to understand them all. I'll be the first to admit of how you can use stable coins, for example, as a debt management and debt funding vehicle, and further extend this extend and pretend game of managing all the debts. So there's a lot of really interesting, some of it very risky stuff that they're trying. If everything goes right, yeah, the president with all of these moves and with reinvigorating U.S. industry and whatnot, maybe will lay the foundation for the kind of golden age that he talks about. But right now, if you had to choose one or the other extreme, the odds still favor an epic bust.
Yeah, I'd be in agreement with the epic bust. There's a number of things to pull at with what you just said. Before I start pulling threads here, I'm going to ask you, if we have the epic bust, who causes it? Government or the Fed?
Well, I think that if we have the epic bust, it's not going to be caused by either necessarily. It's going to be caused by gravity. And it's simply because, and again, this is what President Trump is pushing back against with all these different ideas to goose investment, goose economic activity. Within the context of this flawed system we have, these are the right things to do. So I don't want to say they're not. But even with that, Mike, you've still got such an overhang of debt. The run rate by the time we get to the end of this year is going to be about $1.25 trillion per year dollars of annual interest costs just on the debt. So that's going to be pretty much the single biggest line item in the federal budget. Has anybody ever suggested to President Trump that that's unnecessary to continue? If you don't like the Fed, don't try and if you don't like a whorehouse, you don't mix up the prostitutes in a whorehouse and put ones in who are a little prettier and like to experiment more. You shut it down, and that's what needs to be done with central banks the world over, including with the Federal Reserve. If you're not going to do that, you got a problem. Now, I think that in the end, just trying to browbeat interest rates a little bit lower but continue the same thing is not going to work in his favor.
No. I'm going to start to pull some strings now. You talked about the deficit this year, and you were curious to see if it was going to be lower than what was there. And I look back to uh, the legislation and the budgets and the kicking of the can down the road and everything that happened leading up to the passing of the big beautiful apple pie and I love my mother bill that followed here just before summertime. And most of the budgetary measures up until that point extended the budget of the previous Biden administration because they didn't have the wherewithal to pass a budget. Within the big, beautiful bill, there wasn't a whole lot in the way of tax cuts. There was a lot in the way of increased spending, and some of that has already gone in and gone out for the military and for ICE and some of those. In fact, the ICE budget allegedly is larger than the budget for the U.S. Marines. So you've got increased spending, an economy that's kind of neutral. I don't see where that deficit can occur. And even in the big beautiful bill, where there was a modicum of cuts, a lot of it to Medicare and Medicaid and to other social programs. A lot of those cuts were set up so that they actually fall after the next midterm election so as to not affect voters negatively. So the likelihood of this deficit number coming in significantly lower, I think, is pretty remote. And then we add the interest rate on that $2 trillion deficit going forward, making it spiral even further out of control next year.
Well, you're right. And I mean, generally speaking, I'm not expecting there to be any meaningful and lasting reversal of deficit spending. So I don't want to pretend that I do expect that, or think that if we do see some of that, it'll be any more than a one-off. Also, don't forget that there's a bill in Congress with the 300 or 400 billion annualized that the Trump administration is bringing in a tariff revenue. They want to give a so-called rebate to taxpayers. So, you send everybody a check for a few $100 to spend on whatever, instead of keeping all that to pay down the debt. So look, you're right with where you're going, Mike. Is that bottom line is that this administration is no more serious about balancing the budget than any of the others that we've had in there for quite some time now.
No, and it's, you could keep doing it. Everything's fine until it isn't. And, it's like the old, and I've seen this quote attributed to like a dozen different people. But the most famous was Clements, the writer who did Tom Sawyer. It said, "How do you go bankrupt? Very slowly and then really quickly at the end."
Right.
But I've seen that quote attributed to a number of different people. So who knows who actually said it? But it's the same as that portion of the House of Cards. It's everything's fine until it isn't, and when it isn't, it's going to have quick and immediate reverberations. So I'm gonna now pick and pull at another string about the Trump tariffs. I don't know that they're actually going to generate as much revenue as Trump thinks they are, because what I'm seeing happening behind the scenes is I've seen a lot of countries that didn't trade with each other a whole lot getting together and going, okay, what did you buy from the U.S.? What do you sell to the U.S.? Can we do that instead? And I think you're going to start to see a lot of the imports into the US all of a sudden stop. And I'll give you a prime example using Canada. Canada right now needs some new submarines. And normally we'd be looking at American suppliers to help supply these submarines. America's not even on the equation. They're looking at Germany and they're looking at South Korea. And there's a push going on by the European Union to say, hey, you've been a partner in NATO for all these years. Join this new partnership in rearming Europe. And we'll take care of those submarines, and then you'll get the investments for some of these other things that we need in Europe. And again, the United States is being left out of that equation.
Well, and this is one of the risky parts, clearly, Mike, of Trump's strategy to try and, use what he deems certainly as the power of the U.S. and his persona and all this kind of stuff to bend everybody to his will. What if it doesn't all go well? What if the U.S., as Biden did in some other ways during his term, accelerates the move of alliances and whatnot away from the U.S.? I think that where we're going anyway, and I've said this for a long time, President Trump and some in his administration have also pointed out this inevitability that we won't forever be the globe's chief economic power, policeman, or anything like that. And we're going to have to look to the reinvigoration of the Monroe Doctrine, or like the New York Post infamously put it, the Donroe Doctrine. And we look to our own hemisphere. That's all good stuff until you realize that what does that mean for U.S. financial markets and debt? when we have become somewhat dependent on the rest of the world to prop up our markets, being the globe's reserve currency. That would argue, if that starts to reverse more aggressively, that would argue against an even, or for rather, an even weaker dollar, even higher long-term U.S. interest rates, all else being equal. And then, of course, that's going to prompt a reaction from the Trump administration, like Mohammed Al-Arian talked about in some detail yesterday on CNBC, where we will have a new round of QE, we will have yield curve control, we will have steps put in place where essentially by edict, since Trump doesn't like the market calling him out on his policies, well then we're gonna outlaw yields going above a certain level. I don't think that'll work real well, but we'll see. So look, I mean, there's a lot of stuff going on right now that shows a lot of the rest of the world from an economic standpoint buying a lot of what Trump is selling. With the investments that they want to put into the U.S., the way that Trump is going about some of it has got a lot of constitutionalists, and especially if you believe in a strict construction of the Constitution and what a republic is supposed to be, people's heads are exploding right now. I mean, now forget the Hitler comparisons. Now you got Mussolini comparisons, where the government's taking chunks of all these different industries and going to run industries and whatnot. That's some pretty outlandish stuff to a lot of people right now. But economically, he's getting away with more than he's not. Where it starts to go the other direction is that when he pushes too far on some of this stuff and tries to continue to reinforce, just because he doesn't want to be shown up, U.S. hegemony on foreign policy and geopolitics, and that doesn't go well. I mean, here again, it wasn't that many, just a few weeks or so ago, that President Trump traveled to Alaska to meet with Russian President Putin and supposedly lay the foundation for what will end the war. Right now, in front of me, the headline, Russian airstrikes on Kiev kill 18 as Putin snubs U.S. on war, which was inevitable, okay? And I don't say that because I'm taking one side or the other in this thing. I say that because this is one of the ways in which Trump's knee-jerk reaction on some things, just because he thinks he is supposed to be obeyed or the U.S. is supposed to be obeyed, is going to blow back on us. Look at yesterday when this 50% so-called secondary tariff went into effect with India. Now, if I was the U.S. president, Mike, and trying to maintain good relations with everybody in the world that I could, I wouldn't be so quick to try and punish India, which has got the world's largest population and the most industrialization to come in the coming few decades of any country. I would want to remain on the good side of that, instead of not only punishing them for doing what they need to do in their part of the world and as part of this, nascent BRICS alliance, and that is trade with their partner Russia, but especially when I'm not doing the same thing to China. I mean, a lot of people, even some of Trump's supporters, have called him out and said, look, it is bad politics and it's beyond hypocritical to say you're going to punish India like this, but you're not going to do the same thing to China, because you're going to treat them differently and you're going to treat India because you want more from China. I mean, this is where pragmatic deal making, but without any underlying principles, starts to get reckless. And the scary thought, and again, if we go back and some market event or something else or geopolitical event causes the markets to reverse these bubbly behaviors that they've had in the recent past and so forth, Trump is everybody's buddy right now until the market drops by a third and everybody's worrying about war and stuff like that. Then all of a sudden, the attitude toward Trump on Wall Street is going to change right back real fast. And that's what he's got to, if I was Trump and every morning I wake up, I'm trying to figure out, okay, what do I do to forestall that? So, the tariff thing, I agree with a lot of the policies that he's pursuing. I think some of them are short-sighted. I think some, where Canada's concerned, have just been stupid. Not to mention very ill-informed, where Trump, makes various claims that just have zero factual backing behind it. But we'll see. But this is definitely, for as much as it might bring a few hundred billion more a year or so into the Treasury, the cost may be worse in the end for what prestige and trust we're going to lose in some of the world.
Yeah, the final string I wanted to pull at was the talk of investment into the United States. Trump has a personality flaw, and I don't want to jump on the bandwagon everyone else jumps on, but the personality flaw that he has is he hears what he wants to hear, and he also has a tendency to make a giant decree that has low basis in factuality. And when it comes to investment in the United States, you're seeing a combination of those two flaws coming together in a lot of cases. You're hearing, okay, well, Europe's going to invest, billions of dollars in the United States. And if you actually listen to the Europeans, they're going, I have no idea what he's talking about. We said, yeah, we'd look at that down the road. Same with South Korea, same with Japan. Our former prime minister said, yeah, we'll put $1 billion in security on the border. We haven't done anything. Our border security is the same as it was before. Eh, but he hears something and he makes a decree that that's in fact factuality. And now to make a point, I go back to his first term where he made the big fuss over, I believe it was Carrier, making air conditioners in Ohio. And there were, he got, them to, and I'm using air quotes here, back down about shutting down the plant. They were going to make a big investment in Ohio. Well, we've gone through the entire Biden term. We're now in, coming up on a year of the Trump second term. That factory, the Carrier promised them, they haven't even broken ground on it. So I look at these promises and it sounds to me like they're treating him like he's a child and all these are just appeasements and yeah, if you're a good boy we'll buy you ice cream at the end of the car ride, type of things. I'm being facetious here, but realistically I don't see where the follow-up's going to come from these promises, because I think they just they promise something that they have no intention of delivering.
Well, and that's been proven before. I mean, look at this big trade deal in I think it was late 2018 or 19, I forget which, in his first term that he agreed to with China. China never fulfilled a bit of it. Foxconn, like Carrier, was supposed to be a big investment here in the state of Wisconsin, where I'm at right now, down in the Kenosha area. That ended up being a shadow of what was promised. And you pointed out very well that this deal that he announced with Europe recently, that was a joke, because a lot of the stuff he said, you've got different European governments after the fact are saying, well, we don't like that. We didn't agree to it. And, a lot, he's, you mentioned personality flaw and I guess there's, that's a pretty appropriate term for it. And it informs what happened here recently with Russia and is still going on in a different context. And that is, this is a guy who was so enamored with the sound of his own voice and so needing to be seen as the greatest deal maker in the history of the solar system, that as long as he can announce something, that's good enough for him. And he doesn't like being called out later when these things don't pan out. Now, does that mean he's insincere? No. Does it mean that none of this stuff is going to happen? No, a lot of it will. But it means that, and I've said this since his first term, even if he has good gut instincts, even if he has the right general game plan in his mind, he is so lacking in the ability to analyze and understand the minutia that goes into all of it, that we don't end up well. Now, the only thing that's going to save him somewhat on that compared to his first term is he has surrounded himself with better people in this cabinet. I think that's pretty well understood. But even that, in the end, if all of these deals are made and they don't go through, we're going to be left holding the bag with more debt, more promises, but less substance down the road. And I don't really think it's going to be that bad, honestly. So much of our culture and media and the political system, Mike, as you know, it's all one thing or all the other. And I try and analyze, as you do, every single nuance, every single part of this. I don't start out with Trump derangement syndrome, and I don't start out with Trump deification syndrome. So I don't have any version of TDS. I look at subject by subject, case by case, and where the president deserves some praise, he gets it. Where he deserves criticism, he gets that too. And that's what we all should be doing. There shouldn't be this blind, and what's been interesting in our press here, especially after, okay, he's going to make this deal with Nippon Steel, but the U.S. is going to be a shareholder. The U.S. is going to be a shareholder of MP Materials. The U.S. is going to be a shareholder of Intel. Now we're talking about some chip companies beyond even Intel. We're talking about AI. Now Scott Bessent, the Treasury Secretary, says the U.S. government's going to own a stake in some defense contractors and whatnot. Now, from an ethical and moral standpoint, it seems pretty appealing. Okay, this is not unprecedented stuff in U.S. history. I mean, Jerry Ford bailed out Chrysler. The U.S. got some benefit from that after the fact. After the 2008 bust, a lot of financial companies got bailed out. There were other times that the car makers had to get bailed out. The airlines had been bailed out. And the U.S. government, as a net result with some of this stuff, made some money. So when Joe Sixpack has got to go out and work and scrape to get by, and he sees these kind of things go on, the tendency is to applaud this stuff and say, well, look, it's about time that it wasn't just a one-way street with money, but that the government, to benefit all of us ostensibly, might actually profit from some of this stuff. So from a moral and ethical standpoint, okay, you say that maybe that's okay. From a legal and constitutional standpoint, people are saying, what the hell is this? Well, the framers didn't give us a dictatorship or fascist state or, any of these kind of things. We got a republic. The government is not supposed to have a role in the private sector, period. So, try and figure all of that out. But, some of this is good, some of it's not. We'll see what happens. But again, to the whole point of this discussion, the reason why, or a big reason why President Trump is doing all this kind of stuff is he knows that the government's got to really push the accelerator through the floor to raise revenue, to broaden the tax base, to do all of these things, and hope that that's enough for us to continue servicing ever increasing amounts of debt.
Yeah. So I think we beat this horse as far as we can beat it and have it carry us today. But you and I are going to, head into the fall here. It's a couple of days away from Labor Day. And I think we're like Bing Crosby and Bob Hope. I think we're off on a tour of venues and events over the course of the fall, starting with Beaver Creek here in less than 10 days.
Yeah, we'll be going to Beaver Creek, and that's a big annual conference out in Colorado that gives us all an opportunity to another good roll up your sleeves, not a typical retail investor conference, but gives people like you and I a chance to visit with management of all different kinds of companies. We'll be in New Orleans around the 1st of November and a lot of other places. And we'll also be at Better in Our Backyards Expo coming up the 1st through the 3rd of October. And, this whole theme is going to highlight a lot of the good stuff that President Trump indeed has been doing when it comes to a lot of policy changes, a lot of executive orders, which cumulatively are having some impact. We talked about this a lot when I was out in Casper a week or so ago at the Uranium conference. There's a good tailwind behind extractive industries and basic industries in this country that I have not seen in my adult lifetime. And so for whatever other critical things I say of the president and some of his decisions, he is 100% spot on. with his moves to reinvigorate American industries and get us off of this dependence on other countries, China, Russia, Kazakhstan for uranium, whoever, and do more of this stuff within our own four walls or within our hemisphere. So this is all great stuff. I'm greatly looking forward to this. And this is one of the better things that President Trump is doing to try and improve the U.S. and our economy and our lot in life with all the other challenges that we've talked about. So a lot of really cool stuff going on, a lot of good investment themes in all of this too.
Yeah, it's I'm looking forward to all those events, and you and I actually being in the same place at the same time
Yeah.
is always fun, and leads to lively discussions that we don't that sometimes become podcasts, and sometimes don't survive the hangover. So, if people wish to follow your musings on the economy and what's going on, how would they do so, Chris?
Well, simply go to nationalinvestor.com, and on that subject as well, folks, and you'll see this in Mike's show notes anyway, if you didn't look already. I put together a compilation of articles, other people's thoughts and whatnot on all of the topics that you and I have covered today, and then some for people who want to really roll up their sleeves, look at the valuation of the stock market in the light of all of this stuff, look at what the future may be for things like gold, which is going to be the big winner almost no matter what happens, and continue to be the big winner, uranium, which is going to be a big winner, et cetera. Also talking in the near term a little bit about energy is an outlier in a bad way right now. It's kind of ironic that Joe Biden and Janet Yellen were supposed to put fossil fuels out of existence, and yet during their time in power, we hit an all-time record high as far as oil production. Now we've got drill baby drill in the White House, but weak pricing and a decline in U.S. production, as well as a decline in America's ability to drive the global energy bus. So that's not Trump's fault. I don't say that to imply that it is, but there's a lot of interesting stuff going on with energy right now. So lots of stuff, but make sure you visit nationalinvestor.com.
Yeah, and if you're in those venues this fall and you run into Chris and I, we're always happy to talk to people. So just
Absolutely.
flag us down. Thanks, Chris. This has been a pretty good in-depth conversation of the Fed and government policy. We'll have to see what happens towards the end of September when the next Fed meeting comes out and they come out with an interest rate. So thanks for your time.
All right, take care.
The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.